Hey everyone, and welcome back to another Tesla weekly video for today. I hope you're all having a wonderful weekend so far. So this week we have some early signs that the Model Y refresh ramp up is, well, slowly starting. I'm saying slowly starting because some have expected the numbers to go up much quicker. Still, we can see a solid recovery in China and even, yes, even in Europe. We're also going to discuss some numbers from BMW and NIO numbers as well. NIO report earnings next week, so stay tuned for that. And then I want to discuss the rumored Model Y stripped down version. Could that be the more affordable model? Is that what we should expect mid-2025? There's a stripped down Model Y, Model 3. That was the question also last week, whether we're going to have maybe the Cybercab with a steering wheel, or just a stripped down version of a Model Y or a Model 3. Because let's face it, if it's a completely new model, I would have expected to see some leaks already, right? Because we are a couple of months away from that reveal, or at least that's what we think will happen. So anyways, let's discuss all of that in this video. If you enjoy this type of videos, hit all the buttons, we really appreciate that. And I also really much appreciated all the comments last week, all the insults, all the bad words, all of that. Really much appreciate that. It really helps the YouTube algorithm. It shows a lot of engagement under the video. So please do keep it up. And if you think Tesla will drop 90%, I think you should short it. So yeah. Anyways, if you want to support me even further, do check out all the links down in the description and in the pinned comment, especially fool.com/couchinvestor if you want to get the top 10 stocks to buy now. Alright, so as always, we start off with the Tesla weekly insurance number from China. So that number came in at 13,800, up week over week quite nicely, also up year over year. Now, all in all, Q1 sits at 83,500. This time last year, we were at 90,400, so we're still lagging behind. I do still expect Model Y to continue to ramp up, and we should see that number increase. Although, you might say, end of the quarter push, maybe export numbers will be bigger, but we'll see. We'll see what happens. I still think there is enough demand in China. As for retail and export numbers for February, well, it comes at no surprise. Retail coming in at 26,777. Exports extremely low since, well, if there's nothing to export, the number is going to be very low, 3,911. And so wholesale number for February was 30,688, basically half of what it was in January. Also, bear in mind, February, New Year, so that's that. Continuing here in China, what we can see is that the Model Y, well, has seen a solid rebound in the last 2 weeks. Model 3 did take that overall number down a little bit. If Model 3 was as good as the previous week, I think we would have been closer to 15,000 insured vehicles for the week. But as you can see, I mean, it's pretty clear that Model Y was the reason why sales have gone down, Model Y refresh. Because look at what's happened. 1, 2, 3, 4 weeks of very weak Model Y sales. And then look at this huge rebound. And yes, of course, there is here Chinese New Year that you have to take into consideration. But it's pretty clear that once Model Y ramps up, we're going to see these numbers go up and up and up. What we've also seen last week is that XPeng and China, well, Li Auto maybe as well, but that's at 0%. They were the only ones that have increased sales week on week. BYD was down, Xiaomi was down, Audi down, Mercedes, BMW, NIO, all down week over week. If we look at Tesla sales from some European countries, which make up 60% of the sales in Europe, so that's the UK, Norway, Netherlands, Sweden, Denmark, Italy, Spain, Switzerland, Czech Republic, and Iceland. Here as well, maybe some early signs of a rebound, because we went from 2,300 a week or so ago to 3,100 this current week. Yes, in a lot of these countries, Model Y sales have just started. So is this the start of a rebound? I think so. And like I said last week, I think the narrative will change quite quickly once we see Model Y ramping up. But okay, I guess you can keep doubting that. At the moment, yes, year-to-date sales, we are still down 24.4% compared to the same time last year. And so all in all, what we see here from those select countries in Europe is that, well, finally we are seeing some acceleration in growth. We can see actually a nice acceleration in Spain. UK is still doing very well. And actually UK is Tesla's biggest market in Europe today. Now in the UK, I believe the new Model Y sales will start only in April. So it remains to be seen what happens in the coming weeks if, well, there is enough old inventory to continue to outperform. Now, of course, like I said, these countries only make up around 60% of the sales. You have countries like France and Germany, still big, but now the UK is the biggest one. I think France and Germany are 2 and 3. We know that the numbers there are not doing that great. But then again, once we are in the month of April, we're going to get the numbers for the month of March, and we're going to see the positive impact of the Model Y. Now, what have we also seen? Well, we've seen this BMW post 37% drop in annual net profit, warrant of subdued China demand. BMW's net profit slumped by more than a third in 2024, flagging continued subdued demand in the Chinese market. Net profit for the year fell by an annual 36.9% to 7.68 billion euros. The car market said that it expects an earnings margin for cars to be around 5 to 7% in 2025, compared with 6.3% achieved last year, but noted the negative impact of tariffs in the year ahead. So, yeah, I mean, who's to blame for this drop here of 37% in profits? I wonder. Interesting. Moving on to Tesla and the rumor or the report here of it may be developing a cheaper, smaller Model Y to rival Chinese EVs. Because remember, the Tesla Model Y, although it's been the best seller for the last 2 years, it is more expensive than the alternative models, than the competing models in China. So imagine what will happen once they are developing and are offering a much cheaper model for that market, or well, for a lot of other markets as well. So the report said the following: Tesla is preparing to launch an affordable variant of its best-selling Model Y in China. The move comes as part of the company's effort to regain lost ground in the country's EV market. The new model, codenamed E41, will be manufactured at Tesla Shanghai Gigafactory, and mass production is tipped to begin in 2026. Again, this is very strange because we are expecting more affordable models already mid-2025. So what is this? This new Model Y will be smaller and at least 20% cheaper to manufacture than the refreshed version that debuted in 2023. Now, and this is a strange thing because it says here the new Model Y will be smaller and at least 20% cheaper to manufacture than the refreshed version that debuted in 2023. But the refreshed version debuted now, not in 2023. So this is quite strange. The current car, a mid-size SUV crossover, retails at around $36,351, while this aligns with CEO Elon Musk's previous promise of bringing lower-cost models in the first half of 2025. The exact details of the price reduction for the Model Y were not specified by him. The new Model Y will mainly focus on the Chinese market. However, it will also be produced for Europe and North America. The timeline for this region has not been disclosed yet. Despite being China's best-selling car in 23 and 24, Tesla's Model Y is up against stiff competition from domestic brands, which have launched at least 6 rival models in the past year. Now again, I don't know how accurate this report is. To be honest, I'm not paying that much attention to it because a couple of things here just don't make much sense. We did talk about, well, the possibility of the more affordable models to be, well, a stripped down version of a Model 3 and a Model Y, right? Cheaper quality and all of that could drive down the cost to make that car, and then will drive down the cost of buying such a car. But the timeline here is a bit strange, if you're asking me. It's a bit strange, so yeah, I don't know. I don't know what's going on here. Plus, again, what's the car for mid-2025? Like I said at the start, we should be seeing some leaks already, unless Tesla has built an underground facility where they're testing and driving that thing. Usually, we've seen that with the refresh Model 3, we've seen that with the refresh Model Y. We are seeing those leaks way earlier than when they are getting announced, right? Officially announced. So, remains to be seen. I mean, it wouldn't surprise me if eventually they do this, right? A stripped down Model 1, Model 3, make it cheaper. It makes sense. So, we'll see. We'll see what happens. Do share your thoughts down in the comment section below. Moving on to NIO, so a quick recap of what has happened and then talk a little bit about what's expected for next week. So NIO brand weekly insurance registration in China, the number came in at 1,930, down week over week. As for the Onvo brand, that's also down week over week, 1,060. So all in all, the number came in at 2,990 for the week, which, as we've seen before, is not the only one that's down week on week. Now, more recently, they said that NIO delivered 13,192 vehicles in February, up 62.2% year over year, down 4.84% from January, but of course, Chinese New Year. The NIO brand delivered 9,143 vehicles in February, up 12.43% year over year, and up close to 15% from January. The Onvo sub-brand delivered 4,048 vehicles, that's down 31.51% from January. Now, last quarter, they said they expect between 72,000 to 75,000 units, representing an increase of approximately 43.9 to 49.9% growth from the same quarter of 2023 for Q4, which is the quarter that they're going to report. So if we have a look at the numbers that they gave us for October, November, December, the total comes in at 72,689, which is, it's beating, but only beating slightly the lower end of their own guidance. If we look at January, that came in at 13,863, quite weak, and February, weaker than that as well. But again, Chinese New Year, so we have to take that in consideration. But yeah, for the quarter, okay, they beat their own expectations. Currently, the current quarter is quite weak. And of course, there will be a lot of focus on cost control, margin expansion, if that's possible, etc., etc. Because in China, it's great that all of these brands are launching new models, right? They're launching new models each and every year. Fine. But can you do this in a profitable way? That's the big question. Now, focusing back here on Tesla, we can see that for the week, well, this might be a bullish red hammer. A bullish red hammer on the weekly. We could see a reversal of the stock. Of course, we started the week quite badly. Didn't look great when the Tesla stock went under $220. But as you know, we said last week that there was a gap here, and it did fill that gap completely, and then it made its way back up. So yeah, we're filling gaps, and maybe right now we're going to see a reversal in the stock, reversal a bit in sentiment as Model Y starts to ramp up, and maybe the thesis or the bearish thesis is broken or non-existent. Remains to be seen, of course. Yes, there is an impact, there is a political impact on the brand and the sales 100%, but I think there's a much bigger impact on the fact that the best-selling car has been refreshed. So, yeah. Anyways, that's all I've got for you right now. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.